Stocks slip on strong U.S. producer price index data and some Fed members signaling more tightening ahead. Banks, realty as well as the IT stocks lead the decline today, even as industrials and core sectors show some resilience.
Minda Corp acquires 15.7% stake in Precol, says it is merely a financial investment, but Precol promoters sensed a threat, said they have the support of the institutions, and Precol's future remains the big question on investors' minds.
Cement stocks gain on price hike moves and ahead of the Goods and Services Tax or GST Fitment Committee meeting on Saturday. But CNBC-TV18 learns that review of GST on cement is not on the agenda for this meet. The industry is hopeful of a reduction in levy from the current 28% after the finance minister indicated a review.
Indigo CEO Peter Elbers sees strong growth demand ahead and is confident of achieving the higher end of their capacity growth outlook of 13 to 17%. He's also bullish on international operations and is looking to add 10 to 15 foreign and domestic destinations in the year ahead.
Hello and welcome to Business Lunch. I'm Nisha Podar and with me as always is my co-anchor Pavitra Parekh. So Pavitra, the trend is the same. The markets all across the world impacted by the economic concerns which we started this year with. And that particular trend really continues, and therefore we are seeing volatility on a larger basis, even though there is an up and a down day on a regular basis intermittently. Over 0.5% down on Nifty 50, 102 points shaven off and close to the low point of the trading session today in the last few hours of the trading session for this particular week. Now, Bank Nifty, that has been a spot of bother, almost 1.5% down, and financials, some of the big banks really leading the charge for a decline and impacting and putting that pressure on Nifty 50 as well. Mid caps, which had been more resilient yesterday, doing better than the finance pack, but definitely down and out and underperforming the key indices, 0.8% down. On my screen, some of the infrastructure-related, cement-related companies like Larsen & Toubro, Ultratech, another company from Aditya Birla Group. These are the ones which are really gaining in trade in terms of percentage and adding to the momentum. But otherwise, on the advanced decline ratio and the strength and breadth of the market, it is more on the declining side, and there is a weakish sentiment today. Pavitra.
Oh, absolutely, there is. I mean, ever since we got that handover, there has been a little bit of weakness. That's only accelerated right now. What's doing the worst is clearly the financials. In fact, for this week, if you take a look at the PSU Bank Index, that's down around 2.8% for the week. Today, a lot of the stocks which are losing again from the financials, you have the likes of Kotak, SBI, ICICI, all under pressure. You know, a lot of the insurance companies have been trading with some cuts. So today, of course, you have SBI Life, HDFC Life, ICICI Pru, but this is the exact same thing that we saw play out yesterday as well. So only piling onto those losses. Do keep that on your radar. This entire pack. Reliance also has slipped into the red right now, and you know, because of its sheer weight on the index, that is important to watch. On the upside, since I do want to give you, some green, there are the cement stocks which are holding up very well. So whether it's an Ultratech, Ambuja, Grasim, all of these doing well, and you also have some of the PSUs, the likes of ONGC, Coal India, holding up with some gains. But let's now talk about the big story of the day. A CNBC-TV18 News break has been confirmed. Minda Corp has acquired 15.7% stake in Precol. Remember, Nimesh had alerted us of a potential corporate development in Precol. He's now joining us with all of the details. Nimesh?
Hi, Pavitra. So, as you rightly pointed out, there is an official communication from Minda Corp that they've managed to acquire 15.7% from the institutional investors in Precol, and they're investing 400 crores. So that's a confirmation now. Now the next thing to track would be what next step for Minda and for Precol. If indeed Minda reaches out to the Precol management and asks for a buyout, then things will look very different. Then it will trigger an open offer as well. So again, this is all realms of speculation. We need to see what's the next step. Officially, though, Minda has confirmed that they've taken 15.7%, but it's a financial investment, and they're looking at like all the shareholders, they're looking for normal shareholder rights. But investing 400 crores in a rival company means that there is some intent of looking for some synergies as well. So that's something to track going forward. I believe the Minda management is going to speak to their investors as well. So that will be very important to track as to what communication they do to their investors. Now, if you look at the shareholding pattern of both Precol and Minda Corp, there is one single investor, which is a private equity investor who owns stake in both these companies. So my understanding is that investor's role will be very crucial for the road ahead. So that's something to see. Also, while the Minda has announced that they've acquired 15.7%, I guess the disclosures in the evening will be very important on who are the funds that have already participated and given the stake in favor of Minda Corp. If you look at the shareholding pattern of Precol, only 36% is with the promoters, 4% is with mutual funds, 12% is with FIIs, and 10% is with the two private equity investors. So 26% is the large chunk float from which this 15 would have come from. So the disclosure will be important. The next step, what Minda does, will be important. But I guess this is a developing story and one needs to track on. But in a significant development, Minda Corp has today acquired 15.7% in rival company Precol.
All right, Nimesh, it's a very exciting story from the deal's perspective because hostile takeover, especially when pre-call promoters were at a very, very dangerous level in terms of also safeguarding the promoter interest in the company and way below the required majority stake as well. So that's why it puts them at this particular risk as well. A lot of things to see in this particular development, but 15.7% is a very aggressive move by a hostile takeover attempt that has been done by Minda. In fact, earlier today, we also spoke to the management of Precol, and they are really committed to growing the business and claim that institutional investors with 16% stake are backing them. Listen into the excerpts of that conversation done earlier.
I was made aware of this late last night, and since then I have spoken to a couple of our key institutional investors as well, and they are very firmly backing us as well. So if Minda has such a plan in place, I'm not aware of it, and I think we have countermeasures to take them on.
All right. So as of now, as per your disclosure, you have said that you're not a seller. What if the price is better? If it was more lucrative, would you be looking at it, or you definitely don't want to sell?
I definitely do not want to sell. I'm 1,000% committed to this business because I think have all the building blocks in place. We have all the necessary technologies in place. We have signed 3 technology agreements with leading global companies from Silicon Valley and Europe, which will further help hone our product offerings.
Vikram, you said you don't have any intention to sell, but do you see any synergies with Minda Corp? Even if you don't sell, would you work with them at any point in time?
No, they are competitors through one of their businesses, but we have taken away a lot of market share from them. And I think in terms of technology and positioning, we are on a very, very solid footing with regard to our instrument cluster business, driver information, automotive electronics business, which is the only business that they compete with us in our portfolio of businesses. So I don't see any synergy in working with them.
All right, that is the management of Precol. So where things stand now is that Minda has acquired their 15.7% stake, but they're saying this is only a financial investment. Of course, it does look like Precol promoters did sense somewhat of a threat there, saying that they do have the backing of institutions. But with that, we are going to move on and bring you some more important opinion. This is from the corporate world. Indigo CEO Peter Elba says the demand continues to be strong and that the airline is confident of achieving the higher end of their capacity growth outlook of 13 to 17%. Speaking to Shireen, he discussed the quarter gone by, the supply chain risks, and lots more. So let's listen in to some excerpts.
The third quarter have been a wonderful and good quarter for us, which was actually, to be fair, long awaited for. But with the solid demand we're seeking made us to be confident looking to the future. I'm not giving any precise numbers in terms of outlook or in terms of precise margins going forward. But again, the range of initiatives we're taking, the solid market demand, the upbeat economic situation in India, all these factors make us very confident in looking forward and basically providing a capacity guidance which we set initially for the entire full year 23 in the range of 13 to 17%. Well, we have indeed the supply chain challenges, which is a global challenge indeed. We have taken various measures to address that. One was to extend some of the existing leases and keep some of the fleet in the operation, which we were initially supposed to return. We have introduced a wet lease operation in order to deal with that. Again, all temporary measures to deal with the global supply chain challenges.
All right. In fact, you can catch the entire conversation with the Indigo CEO today at 7 p.m. only on CNBC-TV18. Stay tuned for that. All right, moving on to another important development. Well, the Goods and Services Tax or GST Fitment Committee meeting is due on Saturday, and Timsi Jaipuria, my colleague who is tracking it closely now, joins us to tell us about what could likely be on the agenda for this meeting. Timsi, tell us.
Well, I would just like to clarify first that it's the GST Council which is meeting tomorrow. Fitment Committee meetings have already taken place and they have not considered the proposal to cut rates or to rationalize rates on cement. Well, that was a proposal that was given at an industry meeting to Finance Minister Nirmala Sitharaman, who's the chairman of the GST Council. And what we are given to understand from sources is that the agenda item does not carry any proposal to rationalize rates on cement. Also, a background, it is not the first time that this particular request has come from the industry. It was earlier also about 2 to 3 years back, to be precise around 2018 or 19, this proposal cropped up at that point in time also, and it was rejected by the Fitment Committee. That time, the idea was that the revenue foregone was in the tune of 28,000 to 30,000 odd crore rupees. Secondly, the proposal was rejected on the fact that the current rates, that is 28% on cement, was actually aligned with the pre-GST regime. That was the rate prevailing earlier also, and this was the nearest rate that the government could fit in for this particular commodity. So let's see whether this proposal of rate rationalization on cement can actually stand the test table of Fitment Committee whenever they meet next and put forward the proposal in the next council meeting or not. But yes, as of now, as we speak, today, the Officers Committee is meeting of the GST Council. This proposal is not there on the agenda, and tomorrow when the council will formally meet, well, as of now, not on the agenda. Back to you.
All right, Timsi, thanks a lot for bringing us all of the details there. But let's move on to an exclusive now. The chairperson of LIC, M.R. Kumar, is likely to get a 6-month extension. This is what sources are telling us. His tenure is set to end in March. So Yash is picking up all of these details and joins us now. Yash?
Well, that's correct, Pavitra. So this could be a significant development as far as LIC is concerned. What we've been given to understand is that government is likely to consider giving an extension to M.R. Kumar as the chairperson of Life Insurance Corporation of India. As far as the current term of M.R. Kumar as the chairman of LIC is concerned, that ends in March, to be precise on March 13th, and we've been given to understand that the government could look at a 6-month extension as far as that tenure is concerned. What this particular extension would help is that it will give some time to the government to actually run the process for the appointment of the next chairman at LIC, the process for which hasn't started as of yet. We're just about 1 month away from the end of that tenure. As far as M.R. Kumar's tenure at LIC so far is concerned, he took over in 2019. First extension that he received was between July 2021 to March 2022. The second extension which he received, which was because of the IPO process, was between April 2022 to March 2023. And if this 6-month extension gets approved, then it will be the third extension for M.R. Kumar. In fact, we spoke to LIC chairman just about a week ago on the company's Q3 results, and this is what he had to say about the appointment of the next chairman at LIC. Do you think it makes more sense to have more continuity at the leadership position, maybe in your role, or someone from LIC actually taking over this role who's seen the company? Or there were also reports that the government is looking for a private sector individual to head the organization, someone who would be an outsider. Does that make more sense?
I don't know. I wouldn't like to comment on this because this is something that government has to decide.
If you are asked if you're consultant...
As of now, this has not happened. It has always been an insider who has been holding the helm of the affairs. I don't see any reason for that to change. But if there are any reasons for that to change, it is left to the government to do that.
All right, that's from the insurance space. With that, we'll slip into a short breather on Business Lunch. But remember, Elon Musk shuts 2 out of 3 Twitter India offices and sends more staff home. We get you more update after this very short break. Stay tuned.
Hey guys, welcome back to Business Lunch. An important story as more layoffs continue in tech firms across the board. Twitter has announced that they have shut down 2 offices in India. So Ritu is here with the latest on this one. Ritu?
That's right. We understand that after laying off more than 90% of its India staff, Twitter has now closed down 2 of its offices in India, and we've been given to understand that these are Twitter's Mumbai and New Delhi offices. The company continues to have a shared office space in Bengaluru, which is its 3rd location in India. Now, this, of course, is part of Twitter's efforts to cut costs globally, and no different from what Twitter has been doing in some of its offices in other parts of the world as well. Now, we understand that only 3 people remain at Twitter India. That is 3 people who are working for Twitter India, and this includes the country lead and 2 other people who are covering the North and East region, as well as South and West regions for Twitter in India. Now, all of these 3 people, we understand, are currently working from home and not in offices. Now, Twitter's Bengaluru office mostly staffs engineers who report directly into the US headquarters. So technically, they're not part of the India team, and it is unclear how many of them still remain in the engineering team in Bengaluru. Now, the company's been in a bit of a flux since Elon Musk's $44 billion takeover and seen a massive drop in revenues. While Musk has hinted at bankruptcy in the past, in late 2022, he did claim that Twitter was no longer in the fast lane to bankruptcy, but it still wasn't secure.
All right, Ritu, reporting from Bangalore. Thanks for all those details. Moving on then, mutual funds are under the SEBI's radar for higher total expense ratios as well as distribution margins. Now, a meeting was held with top mutual funds, and our colleague Shivani Bajaj joins us with what she's picking up from that meeting and the developments around it. Shivani.
The Securities and Exchange Board of India has expressed concerns over the high costs being levied by fund houses on the investors. Industry sources have told CNBC-TV18 that SEBI has asked mutual funds to include all charges, including a 12% GST and transaction costs, under the ambit of TER. The reduction in the TER is likely to directly impact the distribution margins in the mutual fund schemes and hence will be a direct hit on the mutual fund distributors. Mutual fund officials are concerned that this move might impact the investor acquisitions because of lower profit margins. SEBI has also given directions to Association of Mutual Funds in India, and the final decision on this is likely to be taken in SEBI's next board meeting. Currently, the maximum total expense ratio that can be charged by smaller fund houses with the assets under management of up to Rs 500 crore is 2.25% for equity schemes and 2% for debt schemes. SEBI now wants the TER threshold to be lower. CNBC-TV18 has also reached out to SEBI for a reaction on the story.
All right, Shivani, thanks a lot for bringing us all of the details on this important story. We are awaiting any comments that we can get from SEBI. But for now, we have to get into a short break. There's lots more news and updates in just a bit.
Welcome back. You're watching Business Lunch, and before we wrap the show for this week, well, as part of our Future Female Forward series, we spoke to Ranveer about the content creation and the role of gender sensitization there. Now, Ranveer believes that the pie for female in the content creation space is bigger, but admitted that the participation of male is higher compared to the females.
Honestly, on an average, the girls earn more money in like our industry.
Oh, really?
But there's an excess of male content creators. The reason for that is that the brands that engage in influencer marketing are usually in the beauty and fashion space.
Right.
So if you're a female content creator, I feel there's much more money to be made. But we don't see too many for some reason. Again, it's down to probably, again, we're not girls, so we don't, no uterus, no opinion. But I feel my soft opinion here is that lots of Indian girls are kind of just told not to go about their social media presence as much as the boys are.
Oh,
Which
really?
is probably why I feel in India you see more boys as content creators, but the pie is much bigger for the girls.
All right, so that was an interesting take there. And with that, it's a wrap on Business Lunch. Thanks so much for tuning in. Midcap Radar comes up next, so stay tuned for that.
Powered by BSC,